Hi everybody, this is Osprey from MyChartCoach.com. In this video, we're going to take a look at some of the small caps that were in play today. So yeah, I apologize for not getting many videos out last week, but we will be back on track this week with videos daily. So thank you very much for your patience and thanks for being a loyal viewer. I really appreciate that. All right, first up, let's take a look at SOLO. All right, so yeah, it made a huge move today, but there are lots of red flags on the chart. Closed up 108%. You have RSI above 70 here. Notice the long upper wick on today's candle. It hit up here above 740 and pulled back. It broke above the red line, which is the 200-day simple moving average at 664 intraday, and then dropped below. That was a sell signal. So that was the signal to lock in gains if you didn't hit that high of day. So yeah, keep that in mind for future reference. Once you break above that 200-day simple moving average, it has to stay above that level. If it drops back below, that is a sell signal. Okay, if you didn't exit on that long upper wick and the drop below the 200-day simple moving average, this black candle was a red flag as well, and that did signal more downside risk. Our strategy is to exit when there's a gap up open above the upper Bollinger Band. You can see the upper Bollinger Band here and a black candle forms. And today you would have been glad if you followed our strategy, because SOLO, it was trading at 409 in after hours trading. That is putting it below this 100-day simple moving average at 440. At 409, you're putting it down here, which is there's this high here from the 14th. There's a gap back here in August between low of day here on the 8th and high of day on the 9th. And so when it bounced it bounced after the gap, it hit this high right here. It's bouncing off of this high level it did intraday. Right now it looks like it's trading below that level. The candles look like they want to work their way back into the bands. If they do work back into the bands, you have the upper Bollinger Band here at 364, and the first support level is way down here at EMA4 at 319. If it comes down to 319, it's likely to test that 50-day simple moving average at 290. That will be the key level to hold. Look for a technical bounce off of the 50-day simple moving average when tested. It is going to be a red flag if it gets back below the bottom of this gap, or if it basically dropping below that 100-day simple moving average after hours trading is a red flag. It's going to need to get above that 100-day simple moving average at 440 to head higher. If it turns into resistance, it will signal downside risk. Notice the big volume spike and then the pullback. There was lots of distribution today, major share selling going on. You could see there was a climax spike right at the beginning of the day. That was your signal to lock in gains. You had the giant volume spike with the big white candle followed by a red candle, and the candles working back into the bands. Never got back up to those levels. And so, yeah, that signaled downside risk. It got into a sideways channel there. At 409, that's putting it below the low close of the day. And so that's setting it up for a drop down to the 50 simple moving average at 360. Look for a technical bounce off of that level tomorrow. Okay, let's look at PXS. Well, maybe not necessarily tomorrow, but when it's tested. Okay, let's look at PXS. This stock closed up 23% today. Notice RSI is at 84. It's super frothy, all right? It topped out last time when it hit, what is this, about 80 on RSI. So this is a very, very historically high level for RSI for this stock. They have been running the marine transportation sector. I'm not sure if you guys have been on top of that. We've been on that in our chat. It's lots of stocks in that sector. TOPS, DCIX ship, GLBS, like a whole bunch of them have been running. And so yeah, they've been pushing this sector while the stock market's been under pressure. They like to do that. They like to run beaten up piece of junk type stocks when the stock market's under pressure, and that's what's happened here with the marine transportation sector. Lots of these penny stocks are known for dilution, so you need to be careful here. There were 3 gap up opens in a row, 1, 2, and 3, and that did form the bearish 3 gap ups reversal pattern. So if PXS does not pull back tomorrow, it's likely to pull back in the next session or two. It looks to me like it could pull back here and test support. You have EMA4 as the key level to hold on a pullback. Today's candle is floating above the upper Bollinger Band. It's going to need to keep making new high closes to head higher. If it worked into the band, you'd like to see EMA4 at 164 hold. Notice how the candles have all been riding above that pink line. A drop below would be a red flag. That would put the 300-day simple moving average at 156 on deck. It needs to keep that level, turn it into support to head higher. As long as the 300-day simple moving average is holding, PXS can keep pushing higher. If it were to drop below that level, that would be a sell signal, that would signal downside risk. Right now, the risk is that it works its way back to the 300-day simple moving average to test support. Notice it does have the long upper wick on today's candle and the big volume spike. It has that climax spike kind of look to it. So keep an eye out for a black candle tomorrow. If that did form, that would signal downside risk. Let's see here. Let me look at PXS here in after hours trading. Oh yeah, it was. I did look at that. It was at 203, so it was pretty flat. And after hours trading, it did hit 195 and 192. So keep that in mind. This is the weekly chart for PXS. This week, it's breaking above the gold line, which is the 100-week moving average at 173. That's the key moving average to close above for the week. It would be very bullish. Last week, it closed above the 50-week moving average, the green line at 150. That was a really bullish move last week, a very bullish close, and nice follow through this week. Okay, so the big level to hold is going to be this $2 resistance zone from back here in 2017. Okay, notice all these candles hit $2 and it failed to break that level. Once it finally did, that's when it had the big pop and run higher. Well, right now it's at that level. Okay, so this week's candle, this is a weekly chart, it will not set until the last trading day of the week, until the closing bell on Friday. So a lot can change between now and then. If it closes on Friday above this red line, that should be our signal that it wants to head higher. It could very well close below this level, just like all these candles, and pull back. If it does that, you want to see that 100-week moving average at 73 hold. If $2 holds, then you're looking at this 250 resistance zone as the big level to break. There was lots of trading back here in 2015 and 2016. If it could get up here, you have $3 right here is a big zone right above $3. If it got above that, that's when it could really get running. But right now, we're going to see if it can stay above $2. That is the current stop loss level for people that are trying to play it tight. That is on the 15-minute chart at 203. You could get stopped out on that. It shook out. If it breaks below 2, I would watch 193. Okay, so if 193 fails to hold, it's likely to come down to 182. That's the bottom of this channel. You can see it's in this uptrending channel. It's got a well-defined channel. The risk is that if 193 broke, it would come down to this 50 simple moving average at 175. It needs to hold the green line. Once it turned the green line into support, that's when it had a really strong run. If it were to break below that 50 simple moving average, that's where you could get downside risk. That's where it could drop down to the 150s and test that 100 simple moving average. Okay, take a look at CAPR. Closed up 20% today. It's a thinly traded stock, only traded 357,000 shares, but it did close above 30 on RSI after trading below. Notice how right here, this drop below 30 on RSI was this red candle, and that signaled downside risk. Well, today we have the opposite of that. We have a close above 30 on a big down day for the stock market. That signals upside potential. Okay, so this stock had a nice volume spike today. It had a green volume spike, and it closed above EMAs 4 and 8, the pink and lime lines. And so right now it needs to stay above both levels to head higher. If it were to drop below 76, that's the pink line, that would signal downside risk. That's the stop loss level right now. It needs to break above EMA 13 at 83. It hit that level intraday and pulled back. Notice how the high of day today hit this red line. There's a gap between low of day on the 22nd and high of day on the 23rd. If it breaks above 85 here, that would fill the gap. And so what you're looking for now, if you're a bull, is a break above 83, break above EMA 13, fill the gap, break above 85. That would set up a run to the middle Bollinger Band at 90. It's set up for it. It has an increasing volume pattern, and the chart is set up to push higher. We'll just see if it can break resistance. A lot of times breaking an upward gap can be very difficult. If it does get up here to the middle Bollinger Band, it's going to have to turn that level into support. Once it turns it into support, like it did back over here, it could make a run up to the green line, which is the 50-day simple moving average, which is way up here at 104, and it could possibly get a new uptrend started. So it's in the right sector. It's in the healthcare sector. You know, the biotechs, they've been heating up. I don't know if you've been watching LABU, but yeah, that really was heating up with the stock market heading down. If you look here at parabolic SAR, you can see there was a PSAR bull flip today. The green dots are now below the candles. You had a bullish crossover start on the 8, 13, and 5. And so it just signals the chart is trying to heat up. Okay, let's look at APRN here. This is blue APRN, ticker symbol APRN. Chart's heating up as well. Notice how it was below 30 on RSI, and then now it's heading higher. Notice how you have higher lows on RSI. I was just discussing this pattern with a friend on another stock earlier today, and yeah, you can see this pattern is across the market right now, and yeah, this is bullish divergence. When you have a stock is heading lower, but RSI is heading higher, that's actually a signal that it's building strength. And so yeah, this chart is heating up. If you look here at Fasto at 58, it needs to stay above 50. You know, you want to see that green line cross over the red line on the ADX. Today there was a gap up open. That's the one red flag on the chart right now. I really wish there wasn't this gap. I'm not a big fan of gaps, especially for penny stocks. Gaps do get filled. There's a gap down here. If it dropped down to the EMA 4 at 120, it looks like it's about 119 or so as the bottom of the gap. That would fill the gap. It needs to stay above EMA 4 to remain in play for this bullish trade. You can see here the candles have been trading below EMA 4. All these closes are below EMA 4 until today. There was finally a close above EMAs 4, 8, and 13. And so that is a really nice move on a down day for the stock market. Now it has to get above the middle Bollinger Band at 131. The last close above that level was way back here. Check out August. Okay, it had closed above that level and it failed to turn into support, and this long downtrend continued. So if it closes above 131, that would be a really good sign that it wanted to possibly head higher. And then you have the top of the channel basically at 145. Notice the descending resistance line in this downtrending channel. If it can break above 145, that could set up a run up to that 50-day simple moving average at 168. Check out the big volume spike. Yeah, Kevin O'Leary, the Shark Tank guy, I mean, this is one of his picks, Blue Apron. It's been just a total dog since he bought it, but he's got billions of dollars. Maybe he'll load up and help get a run going. All right, you guys, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. I'll post the link below the video. Thank you.